You've probably seen the headlines. Gold is on an absolute tear. Prices are exploding, hitting records that honestly most people thought were years away. Now the easy answer you're going to hear everywhere is inflation. But that's not the real story, not even close. So let's get into it, because what's really happening here is a huge shift in the global order. It's like a quiet revolution, and it's changing the very idea of what money is.
And just to put this in perspective, let's look at the numbers analysts are talking about. We're talking about gold potentially shattering the $4,000 an ounce barrier. Now, this isn't just some small jump they're predicting. No, this is a historic surge. It's the kind of thing that would catch a lot of people by surprise. And, it signals that something really, really profound is going on in the world's financial markets.
So, the big question is, why, right? What on earth is fueling this incredible rally? Well, it's not just one thing. It's actually a combination, a convergence of some really powerful forces, and we're going to unpack them right now.
Okay, so like I said, the knee-jerk explanation everyone jumps to is inflation. And look, it makes sense on the surface, right? Prices go up, so gold goes up. But in this case, that's just the wrong answer. The real story is so much more interesting, and it involves some of the biggest players on the entire world stage.
So our first major clue, it lies in something called the real rate problem. Now, I know, that sounds a little technical, but stick with me here, because it's absolutely central to understanding why gold has suddenly become so attractive. So what is a real interest rate? It's super simple, really. It's just the interest you get on an investment, let's say a government bond, minus the rate of inflation. So it's what you're actually earning. It's your real, genuine gain in purchasing power. Okay, so here's where it gets really interesting. This puts investors in a tough spot, a really stark choice. When real interest rates are low or even negative, holding a government bond means you are guaranteed to lose purchasing power. Let me say that again. It's a guaranteed loss. Your money is worth less tomorrow than it is today. So in that kind of environment, gold, an asset that doesn't pay you anything, suddenly becomes the smart move. Why? Because its main job isn't to make you money, it's to protect your wealth, to stop you from losing it.
But hold on, that's just one piece of the puzzle. The biggest, most powerful force driving gold prices right now, it's a historic buying spree by central banks. It's this massive movement being called the de-dollarization wave.
And this whole thing didn't just happen out of nowhere. It wasn't random. It was triggered by one single geopolitical event that sent an absolute shockwave through finance ministries and central banks all over the world.
And there it is, the moment the United States froze Russia's currency reserves. That was a massive wake-up call. I mean, it was a message to every single country holding US dollars. It proved that those reserves, the ones that were considered the safest asset on the planet, could be turned into a weapon overnight.
And that set off this perfectly logical chain reaction. Step one was the realization, our dollar holdings are actually vulnerable. And that led directly to step two, the pivot. Okay, we need to swap our US debt for something else, something politically neutral, something that's outside any one country's control, something that can't be sanctioned or frozen. And what is that asset? You guessed it, it's gold.
And the result of that pivot? A massive, coordinated buying spree. And this is the important part. We are talking about governments around the world quietly, but decisively, losing faith in the system, losing faith in the reserves they hold, and making a huge strategic move into physical gold. Okay, so that brings us to our third and final driver. And this one taps into gold's most ancient, most fundamental role. It's basically insurance against chaos.
I mean, let's be real. The world feels pretty volatile right now, doesn't it? It feels uncertain, you've got geopolitical tensions, economic instability, and when that happens, people and governments start looking for a safe haven. And throughout history, gold has always been that ultimate insurance policy. It's something real. It's a tangible asset you can literally hold in your hand in a world that's filled with digital promises and, well, digital risks.
So, when you put all three of these pieces together, the real rate problem, the de-dollarization, the flight to safety, what does this explosion in the gold price really signal? It's simple. It's a vote of no confidence.
What we're seeing here is a perfect storm. You've got low real interest rates making traditional safe assets look, well, pretty unattractive. You have central banks all over the world making a strategic pivot away from the dollar. And on top of all that, you have rising global fear driving this huge flight to safety. You put those together, and what do you get? A stampede into gold.
And this really just captures the core idea of this whole thing, the insane price explosion we're seeing. It isn't some speculative bubble, it's a signal, a really powerful one. It's a global vote of no confidence in the stability and maybe even the future of the current financial system. And the craziest part? It's being led by the very institutions that are supposed to be in charge of it.
Just think about this number for a second. 5,000 years. For 5 millennia of human civilization, through the rise and fall of countless empires, through wars, plagues, financial crises, humanity has always run to one specific anchor.
And that really leaves us with one final, crucial question to think about. As the very foundations of our modern financial world seem to be shifting under our feet, what is the ultimate anchor? Well, if you look at history, the answer has always been the same. And right now, it looks like it continues to be gold.